Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to discuss everything the Fed didn't say, and then what we want to look forward to as we come into more tariff negotiations. Let's get into it. Welcome, everyone. As we kind of settle in after this Fed meeting today, that was probably one of the most benign meetings that I've seen. And I have to say that probably the hardest thing to do is to watch the press conference. I feel sorry for Powell because he's got to field these incredibly stupid questions by people that most of which don't even understand economics, I think. I don't know. I guess they're bosses. Somebody gives them this stuff. And I'm pretty sure that Powell doesn't like that guy from Bloomberg at all. I forget his name, but he always has a snide comment when he's talking to these people. There's a couple guys. I mean, even Steve Leeson is probably the most knowledgeable in the room. There's a couple other guys that ask some decent questions, but I mean, this is getting almost embarrassing in some ways, because what I saw from Powell today was just almost like he just was showing up at the job. He didn't really have anything to say about much of anything. I don't think I heard him mention QT, the runoff. I don't know. Maybe I missed it. I think I caught everything, and I just didn't hear any material things that were going on at the Fed. It's just the uncertainty. I think I counted 6 uncertainties that he said, and then it was just, well, we don't have enough data. And this was pretty much, if you read my Substack last night, then it was almost exactly what happened. It was a non-event. There isn't anything to do. We're all sitting here actually in the same position right now, which is, what do you do? I mean, what do you look at right now? The economics don't seem to make any sense. We've got China negotiations coming up in Switzerland, and I was sitting here trying to get ready for tonight's stream, and I'm just like, there's nothing out there. There's literally nothing material news. Now, let's just talk about tomorrow. We've got continuing claims. Paul made it clear that he doesn't see any problems anywhere. People are trying to talk about the ports and all that stuff. He goes, well, we look at that data. We don't say anything there. And I think, I guess the best thing we do is start to look forward here and try to get into looking at what metrics are coming out. We got employment numbers last Friday. Nothing big there other than public jobs outdid the government jobs for the first time, I think, in 4 years. Wonder why that is. But I'm just struggling for much to say here. So, maybe you folks have some comments and some things to bring up. I did get an email from one of you. I appreciate it. Pointing out that the Fed was doing some buying of some securities, and I'm looking in to see what they were doing. They were buying some bonds. Sounds not like QT, sounds like QE, right? So I'm looking into that. So I don't remember who sent it at the moment. I don't have the email in front of me, but thanks for sending that. It kind of triggered a couple things of research I think need to look at. But yeah, there's just nothing. So I'm sitting here. About all we can do tonight. I don't really have anything that I'm seeing here to talk about. So I think what we'll do tonight is we'll go through the data, see what comes up while going through the data. like I said, I talked about yesterday, is we probably have the most neutral Fed ever. And I mean, it's fascinating to me that there wasn't one thing. And the markets, you saw how the markets reacted to this thing. So I'm glad I couldn't come up and make any type of live stream earlier today. And I'm glad I didn't, because there wasn't much there. Yeah, and I'm just looking at a comment that Bear Market Vibe just said. That's pretty much what he said. And this is what I've been saying. We don't have enough data to look at the tariffs that have hardly started. We don't know what the effects of any of this stuff is going to be, and we're just all sitting here. I mean, it's interesting, and I mentioned this last night. I guess I could go into a little bit on this. Is that nothing in real terms, nothing's happened this year other than we've got a new president. A lot of things have been signed in through EO's executive orders. Those type of things have happened. The tariffs, there's a lot of talk, a lot of everything, and there's no evidence and no data, nothing to go. And I've been saying this, I know, in Substack and in the YouTube videos, that we need to get down to July or maybe even September, October. And the only thing, I'm in the camp that a number of the questions that came out from the press today is that I'm still in the camp that we're going to see some weaker numbers in the economy. And I don't think it has anything to do with tariffs or any of this stuff. I mean, that's kind of the noise in the foreground, because I was seeing this slowdown coming way back in January before there was even any rhetoric flowing around the street. We knew that Trump had the agenda that he was going to do tariffs, but no one knew anything, and I'm not sure we know anything else. I mentioned, I think it was last night or maybe even in the Substack, they kind of blend together for me. But, Trump made a comment that, we may not get any deals. Maybe we don't need them or something. All of a sudden they went from having deals to we don't even need them, And I made a comment the other day that I think that, what they're doing is just getting everybody to the table to talk. Is there going to be a new Bretton Woods or some kind of scenario like that? It doesn't look like it at the moment, and it's been, I think this whole scenario for me anyway has been quite frustrating, if anything, and probably everybody feels the same way. But I think there's really not much to talk about. So let's go ahead and get into talking about tomorrow. We do get claims and continuing claims. Paul mentioned those he's not seeing any movement there, and I've been telling you for the last 2 years the claims every week are 2.25. I think we had a 180 one time, and then we 275, but that range has been every week. That's been the case, and we've been watching the continuing claims stay at 1.8 million roughly, plus or minus 150,000 on either side. And that's been it. It's just been very stable. We're at 4.2 unemployment. Everything I've been saying, it sounds like what Powell was saying, because that's what it is. If you're looking at the data, and the only good thing that's happened, we'll look at some of the data. I just flashing over to take a look at something here. Yeah. Okay. Yeah, we must have got our data late tonight, so I was just taking a look to see if the run has started. So it's just now getting started. So I'll try. We'll have to do the data later in the show, because sometimes the data vendor will have a hold up, and so we'll watch that. But as we go through the rest of the week, I think we're just walking into the doldrums, and maybe we're not quite there, right? We're May, and we're not even into the dog days of summer. We got to get into July to get there. So I don't know what's going to drive the markets right now. They look fairly neutral, but they're from a momentum. You'll see when I go through the technicals here in a minute, the momentum is starting to fade a bit. and that's pretty much all that's out there. I've not seen. It's interesting because usually there's something. The last couple of days there were some things we could talk about, but now that the Fed meeting's over, it's just there's not much there. So let's go ahead. Since I can't do the database right now, I'll go through the indices. We'll do the database at the end. I'd like to have that data so that it kind of helps me a lot with what the expectations are. But I'm just checking here to make sure. Let's see here. Actually, it looks like some of this stuff. Yeah, it looks like it just completed. I thought it was not further along. So let me check out something. We may actually have the data. It's not quite updated. So I'll just kind of jump back as soon as I can get it. I'll do it. So let's go ahead and take a look at the. We'll start with the S&P tonight. I've already run the data sheet that I run every night for you, and we'll review that as well. So let's take a look how we've narrowed in. We're kind of flowing right above the 10 period moving average right now. PPM1 is at a 0.22, so it was right at trend level, and we've seen that start to collapse. It was at 0.85 just a couple of days ago, and it just moved, starting to move down, and it looks like momentum is going to flatten out, but there's no projection of anything happening here. If we look at the projection of the moving averages going out, this is probably going, let me just take a look at one of these. This is forwarding out 50 days, which is a little far, but it's just flatlining. So I don't know if we're going to end up in this flatline market or what's going to happen here. We had so much excitement in the last few weeks. It's sort of like such a big letdown. I grew up in the Midwest in Chicago, and I remember when it would be sub-zero, -2, and then it would be 22 one day, and you were in a short sleeve shirt. Maybe that's what it feels like now. We had this big volatility. I've been harping about this normalization thing that has to happen. Well, now it's normalized and even gotten worse, where volatility gets low. Typically, and when volatility gets this low, it's preceding some selling that comes in. For whatever reason, this low, very tight, narrow ranges start to predict more of a change. And I can show you this real quick. And I remember talking about this going back, but let's just take a quick look. I'll point this out. So right here where I'm putting this line, if you notice, the market grid just kind of narrowed in. We're not quite yet here, but we're probably going to see this just come in here. Typically, this will negate and start to move the markets down. There's a couple of things that I've been talking to you about. The 5837 number that's been on, that is the highs, I believe, right here. And as long as we stay below this line, then there's still probabilities of the market's ultimate retesting the lows here. Let me fix this range just a little bit. Yeah, so these fib targets that are down here are still, I'll just zoom in here a bit. These targets are still valid. The rough numbers for these things are around 51.78, and then the big numbers, which are really a retested low, down at 49.28, 48.32 was the low on the spike. Are we going to get down there? I don't know. The patterns are just so flat here. There's no prediction. And I'm not sure, now that we get the Fed behind us, what else are we going to have? We've got earnings basically behind us. We've done everything we can. We're throwing everything we can at the market. We got the big spike on Liberation Day, I think it was called, and then here we are. We're I think down 5-6% on the S&P, down about 9 or 10. I don't have the exact numbers in front of me, so we're just flatlined, and that's probably appropriate due to the lack of data that we have, the big shift that is theoretically happening around us, which was the tariffs and all of those items. So we're not able to make any judgment. And maybe this might be, and I've been screaming for the last few weeks, right straddles, especially on the SPY, all these things just right out of the money, calls out of the money, puts, take the money, they're going to give it to you. And I've been saying that for weeks now, and the range is just staying in place. And right now, it's going to be tough to find something to stimulate the markets from a news standpoint. The only thing that could happen is some geopolitical thing. Maybe they managed to come out of these meetings over the weekend and they'll throw some positive stuff out there. I saw something that I think one of the central bank heads in China made some positive comment about negotiating. But I mean, that's the kind of stuff we're going to get. It's just jawboning noise, and maybe there's some noise that will create some volatility. But right now, the contraction has been happening. We've been in a slight upward bias, but it's just contracting down really small. And right now, the algos are more negative than they are positives. So let me zoom out here and let's take a look at the data sheet here. And so what we've got at the moment is we've got a couple of things are happening. The pattern target, it's kind of a neutral to bearish range that we have. Bullish but weakening is the comments that are coming out of the data sheet. Approaching a resistance zone, which we already know. We just talked about it. So it's just kind of confirming what we already know. There's no real numbers out here. Since the volatility is contracted a bit, we're looking at the R1 5662. By the way, I just need to mention, last night when we were live, we were trading just about S3, and the counter trend trade that came off the sheets last night was to sell S3, have a stop above, I'm saying S3, R3, and then have a stop above the RTX number. Well, it printed up to 89. It was just short of that number. I think I might actually have, let me zoom out for a minute here. And I might be able to bring this up here real quick. I can actually. So if I zoom in here, this was the trade. Where is it? This was the old sheet. Okay. Yeah. So, but the idea was to sell. Here's R3, 56.76. The stop above 56.96. And I deleted the old sheet. So that was the trade of the night when we were there. I remember saying we're probably printing the highs of the session. We could go negative with the Fed, and we did go negative with the Fed. And then it was bouncing around just on either side of a positive. But that was a good trade. So let's kind of go back. Let's go back to today's sheet. So S1 breakout. So if we can get above get below S1, then looks like some more selling to come in. That's at 56.28. And you see in blue here, I'll highlight these, but these numbers here are highlighting what their R1 S1 range is, what's being predicted. If we break above or below that range, then typically you'll go to the next number, and that's how these sheets work, right? So you're just kind of getting to that level. So back to the charts. Not much to talk about. I'm going to probably be. I'm going to just take a look and see what some of you folks are saying here. Yeah. So Matt Doan, you're probably right there. The 200 is going to be the top end of the range for sure. But the market grid, like I said, is just contracting here. So that's going to be. I think we have another day. We're also looking at ppm 2 and 3 starting to fade after today. So we should see a downtick in ppm 2 tomorrow. And then from there, we'll probably see some downward pressure, maybe challenging the 40 and 21-day moving averages. Not far away, but let me just bring up what those are. You're looking at the 21, 54.92. Hang on. Yeah. The 21 is 54.92, 55.32 is the 40. That's the higher of the two in this pattern. So this will be most likely coming in here. It looks like it's going to be really boring. I can't imagine we're going to get anything out of that stuff. Yeah, and Green Garden, I did see that as well. That Trump says he's making a huge announcement before he leaves for Saudi. But it moved them. I don't know what it is, So maybe he's got a pocket deal that he's going to throw out there. Yeah, and JDLEF. Yeah, this is probably the calm before the storm. That's typically how these things set up, and I still have the indicators are kind of mixed right now. But like I said, we're in this sideways range. I still have this general sense that we're going to have to challenge some of these numbers that we saw. It'd be nice just to print down and go down 21%, rally 15%, and then just go sideways and then consolidate and go to all-time new highs again. Like I said yesterday, yeah, so my fig, somebody's asked me what my fig configuration is. I believe it's 6 and 6. Let me just double check. Yeah, 6, pivot strength 6, low 6. Like I said, I usually go from 4 to 6. The defaults might be 4. So take a look at that and you can check those numbers there. But yeah, so like I said, it looks so quiet right now. That's what sneaks up on you. I still think those call strategies, selling calls, doing big straddles around these ranges. I mean, out of the money, take the money you can. And, the good news is there's expirations every week. So you can really grab some of this money without taking a lot of risk, I think, especially on some of the deep out of the money. But I've been saying this for maybe 3 weeks now, that this was the strategy. Once we printed, like I've been saying, once the big day on Wednesday 3 weeks ago was, that range basically established the range that we've been in. We've been slightly above it, but we've never came close to taking it out. We went about 50% in a couple of days after, but it's just been stable. And it's, you keep thinking there's been an upward bias. And I've showed you the other day that there's probably an ABC here, an X wave, and then another ABC. That's probably what we're going to get here. I don't see anything to move the market. So I've said this before, and maybe if you're seeing this and you want to comment in the on the replay, is what would make the market's new high? I've seen people go, 5 weeks from now, we're going to be all-time new highs. I guess that's possible. Maybe there's some deals. Maybe this deal Trump's claiming he's got. I sure hope he's got something good, because you're going to lose a lot of credibility, because they've been talking deals and then deals and no deals, right? So let's go. I'm just going to bring up the weekly just because it came to mind here. So weekly, We've got an inside week. I did mention this the other day. 57.24 was last week's high. So far, 57.06. So we're right there. That 58.37 is the big number. That's the one. To me, that's the only number that matters. If we take that out, then that changes the configuration. It changes the wave count a little bit. It does a lot of things if that happens. And right now it's an if. It hasn't happened, so you can't play it in. But if it did happen, I played out a scenario a couple of videos ago that what would be likely to set up there. So let's move on. Let's go to NASDAQ. I'll leave the weekly up for the moment. Same thing. The one thing, this is the same configuration here. If we look at the algos, the PPM1 is trying to move up, but here's the big issue. Let me draw in this. So this is going to be the big issue in this pattern. It's the same thing. This is a weekly chart here. So these areas here on the weekly, the PPM 2, 3, and the PPM 200, the only one that has a positive slope here is this increase on the PPM 1. So I'm going to do my best to explain what's going on here, and especially for those of you that have the PPM. So we'll call this the lesson for the night. I'm going to get an official. I'm still trying to get this other software working. Hopefully that'll get done, because then it's going to give me a better way to feature some of these things. But you can see here on the algo, I'm going to draw it in. This is what it's projecting, and it's projecting it out to roughly into this range here. But what we see over here on PPM 2, 3, and the 200, what you're seeing is a developing downtrend, and this where I'm drawing right now is actually the 40 period moving average. So what you're seeing is this gradual rollover of these longer term averages. This is weekly. So that 40 is like a 200-day moving average, very similar. And the 40 is showing a decel on that, a decel on the 21. So all of the trends are rolling over. And this is why, along with the intermediate database, and as soon as I get done with this, I'm going to go back and see if the database is updated. But everything is pointing towards there's still downward pressure. I'm still convinced. I don't think we've seen the low of the year yet on these indexes. I know a lot of folks think we have. We may have, but I'm telling you right now, unless I see more traction in our intermediate database, this thing's going to stay under pressure, and there's going to be vulnerability for the markets to move lower. And, I just want to caution everybody is, you can get ahead and get out on the front of your skis trying to load up and buy and think you've got the low of the year. I keep painting out the perspective as we had this 23, 24, that 52+% gain. We're still consolidating those gains. There's a lot of metrics that have to happen, everything from the earnings and, earnings per share and the overall look on what fundamentally is going on. And then we actually have what would appear to be right now fundamental headwinds, that there's a lot of things that are going to change those earnings projections, and we're kind of stuck here. And so what is more likely is that we're going to roll over, retest the lows, probably go down another level. Do we get a full blown 35, 40% correction on here? I think there's a reasonable chance of getting well below this 200-week moving average that we're looking here. We're on a NASDAQ weekly chart here, there's not going to be, there's going to be plenty of volatility. There might be some upward pops, but if we take out those numbers at 58.37 on the S&P, it's this number right here. I can't get to it at the moment, but I'll give it to you once I pull off this drawing tool. This is going to be the key. If we stay below this level, then I think we could see, I'm going to draw in a pattern. I got a lot, where we're going to see something like this, and this is October, November, December. We come into the year end, finishing on our back foot, so to speak. And I still think this will end up to be what the pattern looks like. It's possible even to run up a bit higher above and take out those numbers, but it's just going to delay, I think, the inevitable of this is how this pattern is going to play out. And it's the same thing on the S&P and the NASDAQ. I tell you all the time, they're cousins. They have the same family members in both indices. NASDAQ has a little higher beta because of some of the weighting in the tech area, obviously. But the bottom line is, I'm still convinced that this is the story that we'll see unfold as we go through the year. So, like I said, what would change my mind on that? So I'll play the dumb reporter role. Ask me a dumb question. What would change my mind is that the database got well over 42% on our intermediate database, and we start to see enough traction. I've talked to you folks about this before. I'm going to bring up the database as soon as I'm done talking about this. But we need that structure. We need that underlying foundation. It's not just 7 or 8 stocks or 20 stocks that can drive. They will certainly weight the index in a direction, but you need a lot of other stocks participating to get the 52% yields. There's stocks that went up in the 23 and 24 that were huge trades, and they weren't on the front page of the Wall Street Journal. Okay, so there's the foundation that we need, and the not just from a technical standpoint, but just that fundamental. We need the all boats to be rising, not just a few. And right now we have most boats have even sunk, or they're just trying to stay afloat at the moment. And we're at like 25% long in our intermediate database. All right, let's clear this up. Let's see if I got. Let's just see if this thing has updated just yet. Wow, it sure did. Okay, now it's done. So we got another 1,500 new buys. We are now, after all that's happened, I hate not having this data, but 66.93. So we have this thing is just screaming on a short-term level. So this is, once again, very impressive. We've got bullish ratios on daily 3-2. So, maybe those numbers will play out. But this is a short-term database. And if we look, I'll zoom in so you can see these numbers a little better. We're still early in the cycle phase here as far as you can see, I'll highlight this number here. 11 of 34. What that is the average holding for these indexes on the sectors, which are way over here, are basic materials. This is what's long right now. But this stuff here is what it's telling us is that this is how many days it typically holds. So we're still in this positive cycle here from that standpoint. And we've got maybe a third of the way through. And seeing these numbers come up here at 66.93, that's pretty impressive. So the short term continues to get stronger. And I said, from a standpoint of the indices and the analysis we just did, there's really not there. This is great. It means that there's a whole lot of stocks that are moving that aren't the Mag 7, so to speak. And I think Apple and a couple of them had a pretty rough day today. But the point is that we're still getting a short-term database. And what this has to, it's Wednesday. So this will, if this stays in place as we come into Friday's run for the intermediate database, then maybe we can get some traction and get that up over 28. I'm just going to bring up the intermediate here real quick. It's at 2547 right now. There's only 3,734 symbols long in the intermediate database, and there's 10,928 symbols neutral or have no position. So that means those stocks are not in a trend mode or are declining yet. So there's still a lot here in the short term. We've seen this kind of action before. If we go back to last year, we saw the database, short-term database, just swinging all over the place. But this is impressive on a short-term basis. And this would at least set the tone for possibly testing some of those upward numbers I just talked about on the indices. All right, so let's, since we just went through a Fed, let's go ahead and take a look at the weekly uh, 10-year. We're starting to see a bit of a downward bias coming in. Like I said, down here, if we carried all the way out, it's like 395 is potential. I think we still stay within the range right now. We're at 420, 428. We had a 37 high, and this is a weekly, and a 26 low. Let's put this over to daily here. I did do some yield curve look yesterday. Yeah, so everything just stabilizing right here. 420, 415, 410 is going to be absolute extreme, and 440. So just going to look at a flat line here from that standpoint. So nothing on treasuries. Fed certainly didn't say anything. It was an interesting question. You know, like they're asking questions like, what would make you lower the rate and how much would you lower it? And it's like, those are questions that nobody can answer if you don't have the data to support the answers. You could make up stuff and speculate. That's okay, and that's what most people do. They'll look at something, go, oh, I think it's going to here. And then this is about what happens when you're doing discretionary trading, right? You look at a chart and you think it looks good, and you think, well, it could go here, and you buy it, and you kind of believe that. You're marketing those trades to yourself. You're convincing yourself that these things are going to happen. If you're looking at pure data, trying to figure out if they're going to happen, it usually hopefully gets you back into a bit of reality, and you're not going to be chasing trades or, panicking, having FOMO, all the emotional things that can happen around trading. But as we look at this, I mean, it's a flat line, and all these markets are flatlined at the moment, and I just don't see making any kind of move. And one of the art to trading, maybe that's a book I should write, The Art of Trading, but the art of trading is really trying to determine when these points are going to, there's a possibility or the probabilities are higher for prices to move than they're not. And that's the hard part, because when you're looking at everything, that's why I have the data sheets. That's why I built the platform, the trading platform, and having a set of rules, because there's no way for you need to have the criteria for you to make a move. And if you're just looking at things, and I always say, be careful. I am on a YouTube channel. Be careful what you listen to. You might believe it. I've been right and wrong. Everybody has, and no one has it right. But generally speaking, because of the database and how the analysis I do, I'm at least pointed north or south in the right times, or neutral. And, for right now, we're based on the intermediate. We're just a very neutral base. And there's nothing out here telling us there's any big movements coming, which is good and bad, right? So now you can go back. This is probably more of a time of individual stock picking than trading indices. Other than, like I said, the volatility we had a few weeks ago. Now that we've normalized, we need to reset. I talked about yesterday if the Fed did something to reset that volatility. They didn't do anything. I was amazed at how Powell just kind of walked around different elements yesterday. Lots of activity in gold. Had an interesting night, still staying above its 10 period moving average. Once again, mixed picture here as far as the gold goes. We have potentially advancing ppm 1, ppm 2, 3, and ppm 200 are just kind of flat to losing momentum. So in the case of gold, the 10-day moving average still is a point that you can buy off. We traded all the way down just to the 21, just below it, and then we bounced back up. So I'm going to go to a weekly chart because I think there's a pattern here that is starting to show its, yeah. So this is, I've shown you this chart many times. So this vertical move, that this moonshot that's being presented, I believe will continue along this line. But for right now, we're getting the market grid to kind of start to give us some clues of trading ranges, what to expect. So let's take a look at that. Yeah, so you see the market grid is turned on. We're going to redraw this. And then what should start to happen is we're going to see the market grid come into some kind of that normalization cone. And that's going to put us probably out in maybe around July or so. And then on this right here, this is going to be the primary demand line will be this 10 period moving average. So we should, no matter what happens, the market should bounce off. This is a 10-week moving average, not a daily. And, and that's going to set the pattern, and we should see some sort of pattern like this emerge. So this would be market grid, just kind of ultimately setting up one of these little bubble wedges. Sometimes I'll refer to this pattern as a dragon head if it forms. This was a dragon head over here in a way, right over here, and then there's another mini, and these usually emerge out of upside. So this here should probably do the same thing. We should continue out of here to the upside. There doesn't appear to be anything that's suggesting that we're going to go down or do anything of that sort. Okay. Yeah, so we're starting, I brought up Bitcoin. We're starting to get to that critical juncture, right? We're sitting here, we're printing 97 and a nice surge. This is a weekly. Let's go over to daily. We'll be able to see this a bit better. There we go. So we're talking about, we've got this rising 10 here. The 100,000 level is going to be a key psychological level. We're seeing some of those numbers come up on market grid on the weekly. 100,000 right now. We're still looking RXT 99,408. And this is sort of interesting, and this is going to be an island that we got a downward projection here on the fibs. I always mention those when I see them. You see where my cursor is. They are 83, 78, 75. I don't think they have any basis at all. The algos are suggesting slight bias to the upside on 3 of the 4 indicators, so that looks pretty good. Matter of fact, while we're talking here, I'll run the data sheet on this current environment here, and then I'll bring it up on screen for you. One second, just bringing this up. So this is the sheet running right now, just doing all the statistical stuff here. So while that's running, I'll just kind of come up, and we're probably going to finish early. I'll look at a couple of questions, try to answer a few things here. But as the sheet's running, we'll see what kind of probabilities on a short-term basis is coming up. But it looks like I've been saying, that 100,000 mark, we could see a stampede. I think it's all about how the market acts. If we get over 100,000 on Bitcoin, if it gets up to 109 and change the old highs, what kind of reaction do we get? What kind of traction do we get? Is it a big stampede, breakout? I have one last number of 121,000 is the top fib target at the moment. Maybe if we get a breakout over 109, we'll start to see some new numbers flow out of the logic. But for right now, we're not seeing it. So this sheet should be run pretty quick. Takes about a minute to a minute 40 to run these sheets. I'm hoping to speed this up with a API, which will not make it clunk along in a browser like it is right now. So it should be done any minute. But yeah, so this what it looks like while it's running. It's figuring out all the probabilities. Here we go. So we got a strongly bullish, we got approaching key resistance level, which talking volatility is moderate, strongly bullish. Momentum's 9 out of 10 here. So there's some pretty good, you can see down here, this line, let me get out of the way. This line right here is showing us how close we are. We're 90% of the way to this target, 97,609. That's the big target out there. So we're getting very, very close to that. As far as momentum goes, we're looking at everything's plus T with the exception of the 200. PPM 1, 2, 3, plus T is an uptrend mode. So everything's locked in. And looks like we got, so here it is. Here's a trade, the R1 rejection at 97,600. So we're getting pretty close to that. This is R1 here, 97,609. And it's just looking at a move down to S1, a rejection off R1 back to S1. And let's take a look at what the ranges have been so far. Yeah, 96,907 low, 97,535. So yeah. Yeah, so anyway, not a lot there, but this 100,000 level is going to be quite meaningful, to say the least. All right, let me look at some comments that you folks have. Yeah, CPI next week. Not going to be anything there, I don't think. There was a mention of stagflation, and it's kind of funny the way it was referenced. is they really, the way that Paul was talking about it, it was like he didn't believe it. He just wanted to say it. It was like trolling Trump that he's creating stagflation. Yeah, I don't use VIX at all. I don't find it as Green Garden. I don't see that as I don't use it in my analysis, so I couldn't help you. There might be something there, but I'm not able to give you a good solid analysis of that. Yeah. I'm just looking here at some comments, folks, so bear with me. So I'm reading some comments. Hang on. Yeah, I see somebody saying, how could they think about cutting rates, inflation coming up? So that's actually that. I have a comment on that. Is the cutting of the rates have nothing to do with inflation right now, because inflation's somewhat under control. It's still kind of declining. The cutting of the rates, and I've been saying this for a while, has to do with the shape of the yield curve and the structure of the economy, especially through the banks, and particularly the smaller and regional banks need that lower front end rate so they can borrow short, lend long. They need to have that kind of balance there. So it has nothing to do with economy or CPI. And Paul catches himself, by the way, on this whole inflation thing. And he's right. It's a one-time, let's say all of the tariffs got implemented today. There'd be one time, that would be it. They wouldn't keep growing. Now, maybe if there were shortages because of it, maybe there could be some material traction that would cause inflation to grow, but it's pretty much a one-time bump. He knows it. He's trying to say it without saying it. And that is probably the key thing that I saw today. It was like, okay, yeah, it's just going to be a one-time event. And that's typically what it would be. And then he made this comment, kind of paraphrasing here, but then we'll have to watch and see if it becomes more material or there's other things that happen. And if you're data dependent, I mean, I live in a quant shop here, and that's, you pay attention to data, and you even believe your data or you don't believe your data. And, you know, if you're non-emotional and you are data driven, then that's what you do, is you believe your data. You know, everything I've talked about tonight with going through WaveTech database, all that stuff, I believe my data. I've been doing this. That data's been around technically like it is right now since fall of 1998, okay? So it's a lot of years ago. It was almost 30 years ago. So I've been watching this data. I know the data. I've been through so many market cycles, you know, extreme and normal and all that. So I have that experience to be able to say the things I say with confidence, because I've seen it happen, you know, literally hundreds of times. And I know how the ebbs and flows go. They've been a little bit exaggerated. If we look back in the last couple of years, you could probably go back and watch some of my YouTube videos or even read my Substack. And if you don't have Substack, it's kendallreport.substack, $8 a month. There's a 7-day free trial. I did a free version last night. I usually do 1 or 2 frees every week. But you know, this is, you know, data is data. And you even know how to read it. And the quants, the algorithms that I've used have been in existence since technically 1991, 92, the core. And then as they moved into the portfolio management system and other areas, that was around 1996 to 98. And, you know, so the data is data. And like I said, you believe it or you don't believe it. And I get a lot of noise. People, you know, everybody watching doesn't have the experience I have. And, you know, it's okay. You can dispute it. I saw, I think it was on a YouTube comment, somebody said, I didn't believe your forecast for bullish numbers last year in 24, and it cost me. So I'm listening now, but and that's okay, But the way that this data moves and the way we're seeing it, like I've been impressed with the short-term data, but there's so much noise in the short-term data, and most of the cycles of these stocks that I'm looking at are only roughly 35 days, 35 to 50 days. So these things roll over. This database is constantly on a short term just rolling. And when you get to the intermediate database, it's more like 240 days, the better part of a year plus. A typical year has around 220 to 240 days, I think. And so once you get into that, it's almost a year holding. So the database changes and shifts in a slower pace and more methodical, and actually a bit more predictable because of the cycles that you see in there. And meanwhile, the short-term database, through one cycle of the intermediate database, may cycle 8, 10, 12, 14 times in that same period. So it's always going up and down, and you just kind of get, here's the flow. And if you can get the short-term database to get up here and stick up at this 60, 70% level, then that's going to carry over into a lot of the stocks in the intermediate. We'll get more traction, maybe hit 42, but we're in a very neutral zone right now, and there's still a lot of vulnerability, as I mentioned earlier. So let me just look and see if there's any. Yeah, bear market vibes. Nothing has happened at the same time. Do you think an increase in certainty, even if it amounts to zero, takes us higher? I don't think so. I really don't. I think what we're looking at, here really is we're consolidating the gains of the last 2 years. So once you make these big gains, there's just a whole cycle. Everything needs to recycle and reset. Where I will come on board with that comment is when we start to see the intermediate database start to get some traction. And if you go back to 2024, in January of 2024, I was talking that we're going to have back-to-back double-digit returns. Why? We saw a rotation in the database in 23. We went kind of in the summer, we saw a liquidation of the intermediate database, and then in October, November, it started really getting a lot of traction. By the time we came in to early 24, our forward-looking expectations was, that at least, if you recall, into June or July, the rally should go into there, and it's possible to extend to October to September, and it did pretty much that, and then stabilized after the election, that boost in the election. And then now all we're doing is trying to consolidate these gains, and I don't think it has. Everything needs to be repriced, regauged, because you have to remember. I mean, pretty much there was an old cassette company had recording tape, Memorex, right? Those us older folks remember Memorex. And so is it real or is it Memorex? Like, you can't tell. Well, what we're looking at right now is that the whole last 4 years, they were cooking the books. They were making employment looking better than it was. They were hiring government employees to pad that employment. They were massive immigration across our borders. All of these things, spending of money, infrastructure deals for trillions of dollars. I mean, they just pumped it. And I think the goal was, we'll pump it, get another 4 years, and then we can roll from there. And obviously, everybody knows what happened, right? So, but the point is so we're working off all the excesses, all the crud that Doge found. There's just way too much. We have to clean this. We got to clean the books. And once we clean the books, then we can go. That's that normalization. And anybody's done any work with any kind of database or numbers, you need to normalize the data, and we haven't done that yet. That's just one of the. It's not a fact of life. It's literally science. And if you just look at how math is going to work, that's where we're at. So I don't think there's much. There would have to be some crazy, unbelievable surprise that China agrees to send all products to the U.S. for free for the next 3 years. I'm making up stuff, right? The bottom line, I don't know what would cause that to happen. I think everything is recycling right now. All right, well, that'll do it. We're right on the money, about a minute over. Yeah, I haven't heard that lately. I just saw a comment here. The old adage, sell in May and go away. Yeah, so anyway, appreciate everybody watching. I have some decisions. I will have it tomorrow when we do our live stream, but I'll let you know. There may not be a Substack tomorrow night. It should happen. I've got to go out of town, and I'm trying to figure out how to coordinate stuff. So anyway, appreciate everybody watching, being part of the channel. Hit the like button before you go. Subscribe, do all that stuff. We've been picking up quite a few new members on the channel, so welcome again, and we'll go forward. I want to keep interacting with you folks, but we're going to call it, and we'll see you tomorrow, same time. Have a great day.